Ladies and gentlemen, good day and welcome to the NRB Bearing Q2 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Diwakar Pingle from Ernst & Young. Thank you, and over to you, sir.
Good afternoon to all the participants on this call. Before we proceed to the call, let me remind you that the discussions may contain forward-looking statements that may involve known or unknown risks, uncertainties, and other factors, must be viewed in conjunction with business risks that could cause future result performance or achievement to differ significantly from what is expressed or implied by such forward-looking statements. Please note that we have mailed the results and the same is available on the company's website. In case you have not received the same, you can write to us and we'll be happy to send the same over to you. To take us through the results and answer your questions today, we have the top management of NRB Bearings Limited, represented by Ms. Hashbina Zaveri, Vice Chairman and Managing Director, and other top members of the management. We will start the call with a brief overview of quarter gone past and then conduct a Q&A session. With that said, I'll now hand over the call to Ms. Hashbina Zaveri. Over to you, ma'am.
Thank you so much, Diwakar. Good afternoon to all the investors who have logged in to the call. My name is Hashbina Sani Zaveri, and I'm the Vice Chairman and Managing Director of NRB Bearings. And it gives me great pleasure to be talking to you today. Some of you are our existing investors, and I am delighted to connect with you also on our first earnings call ever. I will be taking you through the results of our Q2 and our half year for this year and run you through a look back and a look forward update of NRB Bearings Limited. I'd like to begin by acknowledging that we're doing something quite different this afternoon from what you're accustomed to. And I owe you an explanation for why this earnings call is taking a different format. A few weeks ago, I was reviewing our interactions with investors before the quiet period began, and whether it was face-to-face meetings or on calls, I noticed a pattern of questions. I really didn't want a boring investor conference, and instead I wanted to address head-on some of the key issues that seem to be on the mind of most of the investors that I have met and spoken to. So we brainstormed, my CFO, a few of our board members, and I asked them, what if we cut to the chase? What if I spend our time together with investors and potential investors answering the questions that we know are on your mind? The ones that we hear many investors in meetings ask us. The ones that are lighting up on our inboxes. What we're doing today, instead of prepared remarks that repeat what's in the press release or mirror what you've heard before about NRB, is that we're going to pose questions to ourselves that we believe you're asking and answer them directly. Think of it as us doing the question and answer sessions with ourselves. But at the back end, you have hundreds of conversations that we've had over the past 2 quarters with some of you. Now here's our promise. These are not softball questions. We're going to tackle the uncomfortable questions too. Why has our growth been slow despite the leadership position and our market share in products that we excel at? How will all the new areas contribute to the growth? Is all this likely to reach up to the aspirational goal that I shared in my AGM speech? Are we worried about the new competitive dynamics? We're going right in there. And of course, after we work through the questions we've anticipated, we'll open it to your questions, the ones we didn't think of, the ones where you want to go deeper. We're trying this because we respect your time and also know that you're all extremely sophisticated. You don't need us reading a PowerPoint to you. You need clarity, context, and candor. We will upload a PowerPoint that covers a major proportion of what we're talking about, but we really want to give you candor on what's actually driving our business. So let's get started. The first question I'm putting to myself is, how should we look at NRB Bearings Limited for the medium to the long term? What strategies does the management have to move to the next orbit? NRB has been the leader in the manufacture of cylindrical roller bearings. Over 30% market share by value and 50% by volume. In the needle roller market, we have 60% market share as a group in India. NRB products power more than 90% of the vehicles on Indian roads. That means that at least 90% of the vehicles have at least one bearing from us. The customer list includes the key players in the domestic two-wheeler, four-wheeler, passenger vehicle, and commercial vehicle segment, and the ancillaries. Honda, Hero, TVS, Bajaj, Royal Enfield, Maruti, Tata, both Hyundai and Kia through their subsidiaries, the multi-utility and broad-range manufacturer Mahindra, Eicher, Ashok Leyland, and all their ancillary suppliers, and many other related interesting areas of business such as air conditioning, compressors, and the like. Almost all international majors run on NRB bearings. Now I'm talking about global companies in their home countries. We actually supply into 43 countries. From design to delivery, NRB supplies Daimler, Mazda, Renault and Volvo, Magna, ZF, BorgWarner, Dana, Stellantis, and many others. These are leaders in ICE, EV, and hybrid applications. You have the award-winning supplier, NRB, to Meritor, which is the global leader in conventional and e-axles. The revenue between domestic and international business is split, approximately 70-30. Within the automotive segment, the products are predominantly EV agnostic, with strong positioning across ICE, hybrid, and EV new launch platforms. When I say EV agnostic, which is a term that I've actually coined myself, it means that our products will continue to prevail because these global leaders have come up with a common platform for the next generation launch in which we are significant players that are going to be in the vehicle irrespective of whether it is the next generation ICE, hybrid, or EV. Fundamentally, we are focusing on next generation friction solution for global tier ones and the top OEMs in the world. In the domestic automotive segment, we are adding path-breaking and high entry barrier products which are currently being imported. Incidentally, this is our strategy also for industrial customers. Many of you wonder why we haven't entered the industrial segment. We'll soon be answering that question too. While many of the products that are included in the portfolio of multinational bearing suppliers who are present in India and show in their sales, these are in fact imported. The reason we can replace these is that the technology development and disruptive innovation, which is the core of our backbone, is constantly taking place at our R&D center. This takes me to the next question that has often been posed to me by some of you. Can you comment on the settlement between the promoter groups? Let me explain. Under the agreement effective this February, the Hashmina Zaveri family, my family, and the promoters who are very closely associated with me, has total control and ownership of over 50% of NRB Bank Limited. Just me and my immediate family has over 50%, and the other promoters, who, as I mentioned, are extremely close and affiliated to me, we together own 52.2% of NRB. A clarification on our ownership of the NRB brand name and the right to use it. All kinds of logos, future, past, and present, belong to NRB Bank Limited. The red logo that NRB Industrial and the family which moved out based on the settlement has a right to use is specific. It's 3 shades of red. This NRB Industrial Bearing logo, which is used by NIBL, owned and controlled by Divesh Singh Sani and or his daughter, can continue to have this and use it as long as he and or his daughter are in control or own the company. This logo, along with the name NRB at the start of NRB Industrial Bearings Limited, reverts to NRB if there is any change of ownership in the broadest sense of that definition. This was an agreement that NRB Bearings signed with NIBL, and it also includes other aspects like non-solicitation of employees between the groups, and they also handed over that part of the heritage building, our headquarters, that they occupied. This was important to NRB as the building holds substantial value. As part of a one-time settlement, NRB Bearings Limited paid 55 crore rupees of compensation for this. This was a one-off payment made in Q4 25, which explains the exceptional one-time loss at the net quarter level, whereas the operational profits were actually very, very, very positive. Another question now. What explains the modest CAGR in revenues between 22 and 25? And when I say 25, actually the revenues came back at the last quarter of FY25. This was due to a fire. We had a very large fire in one of our most important plants in Baluch, and that burnt down certain specific lines, but it also damaged our stores, which held most of our two-wheeler WIP in production. In fact, we had not yet entered the industrial friction solution space, but when you look at the impact that the fire had, the two-wheeler industry grew substantially during those 2 years, and we were unable to supply them because we did not want to take any chance with the components that were damaged with water. Secondly, of course, the line itself could not produce till we replaced all the machines and brought them back, bought them from high-quality overseas suppliers of the same caliber that we had first set them up with. Just important to note that all this is covered by insurance, very, very high-caliber insurance, and that is one of the reasons that you kept seeing exceptional gains on and off, also in the P&L. The important thing is that now, not only are we clearly able to use our capacity for all different segments in the automotive space, but post the settlement, we are also increasingly supplying to the industrial segment. I forgot to clarify one thing in the second question I posed to myself. Post the settlement, my holding is down to 0 in NIBL, and that family has zero holding as well in NRB Bearings Limited. Now, we have ventured into industrial and other adjacent areas of growth. The financial performance over the previous 2.5 financial years was impacted by the fire, in summary, and we went back to full capacity in the last quarter of 2024. And now, as you can see, with the growth in both segments, automotive and the industrial that we're adding to, our sales have started increasing while we have maintained and at some level even improved our EBITDA margins. What are the new areas for growth that the company is planning? Was the next question that I was often asked. There are multiple growth levers that NRB will be pressing on to usher in our new phase of growth. In the mobility segment, we continue to be a technology leader. The proof lies in our order book. We have secured orders for the production life cycle of a vehicle, what is known in our industry as lifetime nominated business, worth over 600 crores from global tier ones in the international market and from direct OEMs that we supply. This includes new launches for advanced hybrid and EV platforms for BMW, Renault, Stellantis, Mercedes-Benz, prestigious electric three-wheeler programs for Stellantis, to name a few. These nominations are the result of our black box design capabilities and R&D prowess and competitive manufacturing capabilities. Our products have already powered the next generation of e-drive of Mercedes-Benz for the EQC, EQA platforms for all electric and premium cars that they make, along with a very wide range of BMW models, the 1, 2, 3 series, the X1, the X2, in the truck industry, the Ford S lineup pickup truck, and literally every model of Hyundai, Kia, Jeep, Photon, Daimler, and Packard trucks. As explained, NRB grows faster than the industry by expanding its market share in existing vehicles or applications. Then we add new products. Further, we do advanced engineering solutions for the next generation platforms and for improvement in those vehicles and applications that we are already present. All this is going to lead us to higher than industry growth. On top of that, you need to layer what we are expanding into. NRB was once the widest range manufacturer of bearings in the India pre-demerger. Post the settlement, the company is moving closer and closer to regaining that space. We are doing this by building capacities, diversifying into a broad range of bearings and allied products, and undertaking strategic moves. These will together propel our growth towards our aspirational goal of NRB at 2,500 crores by 2031. The aerospace segment is an additional focus area that we are going to add in. We are in an advanced stage of finalizing an agreement to acquire an aerospace supplier to speed up this process. We have already engineered plain spherical bearings, and NRB has a best-in-class plant under construction as part of an earlier plan to cater to the aerospace industry. The reason we are considering this acquisition is to speed up the certification process, which would otherwise take 3.5 years. Add to this another plant that we are setting up in our Valuj facility, specifically for aerospace. All these initiatives position us uniquely to address new areas of growth, apart from solidifying the automotive segment, where we already are a market leader. How is the CapEx plan to address the above growth opportunities? It's an often asked question. Our board has already approved 200 crores, and this information is in the public domain as a disclosure. Out of the 200 crores, Approximately 50 crores is allocated to investments in a new building and upgrading existing buildings. It's very important that we have adequate space for all the capacities that we're planning to build in, including joint ventures that are on the anvil. We are planning an additional capex of 250 to 300 crores, which will be deployed in stages over the next 5 years, as soon as the first 200 crores start coming in. A roadmap is being solidified, which will take our total capex to 500 crores and enable us to address the order book for future years in hand. This order book, what I mentioned earlier, lifetime nominations, keeps growing. We're just giving you a status of what we already have in hand. As time moves, the lifetime nominations, the value of which is 600 crores for international business and 150 crores for Indian business, totaling 750 crores, is over and above the increases of the existing platform that we supply to. The reason that the international business is 600 and the Indian business is 150, because the international companies have a very long planning process that they put in place, 3 to 4 years before the actual launch, whereas Indian companies tend to have a very short launch time. The CapEx plan will not only scale our cylindrical, needle, taper, roller bearings and ball bearing capacities and all the special bearings that we make, it will also expand our size range, enabling us to enter hitherto unaddressed applications in the industrial segments. How do we intend to fund the CapEx expansion? Given that our debt equity ratio is under 20%, you can see that we have preserved huge cash reserves and have borrowing ability, which ensures that CapEx is not going to be an issue at all. Apart from that, we also have substantial real estate that shows up at book value. The next question. We've heard that NRB has an extremely risk-mitigated strategy. Can you explain this in more detail to us? In fact, apart from our R&D prowess, this is considered our second most critical differentiator by key investors who are already at NRB. No single customer is more than 10% of our sales, and the top 10 customers comprise 50%. The ranking of these customers changes year on year, depending on how they perform in the market. But the important thing is that not only are we risk mitigated in terms of the number of customers, in terms of the segment that they come from, but also in terms of dependence on each of them. Within the automotive segment, approximately 30 to 35% of our sales comes from 2 and 3 wheelers. Another 30 to 35 comes from the CD segment globally, where we are one of the strongest players in the world. After that, you have the PV segment and its ancillaries. There we focus more on the higher volume or the very high value players. And this, along with the ancillaries, comprises close to 20%. Our industrial segment is now moving closer and closer to the 20% mark as well. All these various segments are also served by the replacement market, but we have taken the count in the end product that they serve. Fundamental point is that such a risk-mitigated strategy is extremely unusual in our industry, and this is not a new strategy. This is one of our traditional strengths, and that is why our financial performance, other than the years where there has been some problem, like the fire that I mentioned, has typically led to outperformance versus peers. Overall, as I explained, we have an exceedingly risk-mitigated approach. We are in the process of formulating a high-growth strategy to follow our international customers. Can you share more about that with us? Well, we are globalizing our manufacturing footprint. This is part of our aggressive plan to diversify geographically, add new products, and serve new segments, riding on our R&D and our applications engineering presence, which is in Europe and the US and ASEAN, close to the heart of global innovation. Our Thailand facility has already demonstrated how NRB can succeed in diverse geographies. It is one of our most efficient plants. The cost structure is very similar to our Indian cost structure, which means that we can be successful at setting up plants in new, uncharted locations and do it competitively. Thailand has helped us thanks to its strategic location with marquee Japanese and Korean customers. Thailand is not an assembly operation. Unlike many auto component and bearing companies, NRB decided to manufacture components based on a local manufacturing program. This will hold us in good stead, tariffs or no tariffs. The world of mobility is in the midst of unprecedented transformation. ICE, hybrid, and EVs are all coexisting in a complex ecosystem. There's widespread speculation on which technology will dominate, and more importantly, the timing of these technologies and whether they will converge or diverge. NRB's strategy is clear. We remain technology agnostic and are developing products, applications, and are addressing all of the above. We are deeply entrenched in this philosophy. Whether it's an electronic steering system, an e-axle, a next-generation transmission, or whether mobility moves to drones, whether our work gets done by robots, NRB is present in all these applications, across platforms, irrespective of what will prevail. Our products coexist in all, and we are increasingly dominating in high-end applications which are identical across different domains. What do you feel are some of NRB's greatest strengths? To be honest, I believe employees are our biggest strength. And we remain and work very hard at being an employer of choice. Demographics is extremely important. Your company should mirror the country it serves and the consumers in the marketplace. More than 40% of our workforce is below the age of 33 years. This is a sign of a young and vibrant organization. Quality is our hallmark, and hence we focus not just on caliber of machines, infrastructure, the way our plants are laid out, the way our processes move, robotic lines, and our R&D and our manufacturing technology is actually completely interlinked because you cannot isolate product design from delivery. We try very hard to stay ahead of the curve when it comes to innovating with new products and new applications, and our customer list showcases our success. NRB's focus is on businesses where the entry barriers are high. We choose the world's most difficult customers when we enter a particular segment, and we have historically been extremely successful and continue to this day. Our margins tell the story. Our philosophy is to get into businesses that are hard to get into because these are businesses which are hard or impossible to lose. With that, I come to the end of my Q&A. Fortunately, we were asked so many questions that it was easy for us to put these questions together. It's possible that I've missed some of the things that are top of mind for you, and I look forward to hearing more from you, and I thank you very much for listening. We look forward to delivering strong results quarter after quarter and answer not just the questions, but also reach the expectations of our investors. With that, I come to a close and I hand this back.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Lakshmi Narayanan from Tunga Investments. Please go ahead.
Thank you so much, and good to see that the team NRB has delivered a consistent performance in the last 2 quarters despite a volatile industry scenario. And it's good to see a conference call being held, and I hope that on a quarterly basis, at least we have some kind of information, that communication from the management. That will be quick feedback. Now, a couple of questions I have. Just want to understand from a CapEx point of view. You mentioned that there is a 200 crore plan, and then you also augmented it with another 300 crores subsequently. So from a near-term point of view, just want to understand what is the CapEx guidance for the current year. We had spent, I think, 43 crores as per the cash flow statement, and also I could see a work in progress in the balance sheet around 37 crores. I just want to understand the CapEx guidance for this year. And around that, also want to understand what is the typical maintenance CapEx we do in general for NRB. And again, on the CapEx itself, we plan there's an outlay of 200 crores. Now, this 200 crores, does it exclude the one which you are actually doing this year, or when does it start? If you can just give some communication in terms of, if possible, on how many years it will get spent, and you mentioned 60 crores on buildings. Just it will be helpful to know that from a CapEx point of view.
Okay, thank you for your question. So the first answer is that we spent about 150 crores consolidated. Roughly 50 crores for capacity enhancement and optimization, if I recall. And then another 40 to 50 crores for maintenance and safety. And then we spent maybe 35 crores for expansion of our plants and upgradation. In Thailand, I do recall, we spent 15 crores. So that, I think, is roughly what I recall.
So this you're talking about for this year?
Yeah, for FY26. That was your question, right?
Yeah, I mean, so the outlay for this year is 150 crores. That's what you're saying?
No. We tend to spend approximately 10 to 12% every year in a combination of R&D linked with manufacturing expenditure. That is NRB's normal way, because otherwise how would we keep our lines balanced? How would we add critical, I would say, machines, to those areas where we're seeing an enhanced demand, because you cannot completely predict. So NRB doesn't have a pure big bang approach where we go and put 400-500 crores at one shot and then we go around looking for customers. We are constantly expanding capacity in those lines where we see a demand pattern. I'm very sorry there's this huge noise in the background because I guess, traffic in India tends to use horns a lot. So apologies for that. Did you hear me?
Yeah. I can hear you clearly.
You did catch my answer. Okay.
Now, the second is that CapEx planned outlay you have of 200 crores. When does the thing start, and over what period you would actually invest, and what is the revenue potential for this new CapEx whenever it is achieved fully?
Yeah, so we are spending approximately 60 odd crores on building, actually on the building and infrastructure. The foundation stone for the Hyderabad plant, which is for 100 crores expansion, focused on industrial cylindrical roller bearing capacity specifically, which is for the most part import substitution, because even though there is a lot of sale of industrial cylindrical roller bearings in India, most of our competitors actually import and sell that, and we are going to make it right here. That is, the foundation stone is going to be laid on 4th of December, which is my father's birthday in Hyderabad, and our founder's day. So that the other has already begun in small phases, but most of the expenditure for the Jalna plant and the Pantnagar plant upgradation will happen over the next 3 months. It will kick off in a big way, and it will be completed around in the next 12 months period, and then we are going to get our machines in. The machines are being ordered right now all over the world, top quality equipment, which has traditionally been our strength. And by Q1 FY28, capacities will be in place and we will start ramping up. But what's going to happen, as I explained, is that by the time one starts producing, we would be well placed 6 months to 8 months before that, with the next phase kicking in terms of its start. Now you asked another question. For this 200 crores, how much will we earn back?
Yeah, when it will...
We earn back will be... and what will be the capacity that we generate in terms of revenue? Exactly. Yeah. What will be the capacity generation in terms of revenue and sales? That will be approximately 150 crores, because as I said, 50 crores will actually go into infrastructure. But then keep in mind that when we go with the next phase, we'll already have some of these buildings in place.
Got it. Okay, fine. I'll get back in queue. Thank you.
Thank
you.
I
hope I answered the question
yes.
in line with, I didn't miss anything. That's basically what I'm saying.
That's right, yeah.
Thank you. Participants, in order to ensure that the management is able to address questions from all the participants in this conference, please limit your questions to 2 per participant. Should you have any follow-up questions, please rejoin the queue. The next question is from the line of Mr. Raghunandan from Nuvama Research. Please go ahead.
Congratulations, ma'am, on strong performance. 21% earnings growth in first half is extremely good given the circumstances. And thank you so much for the innovative and insightful Q&A session. First question, ma'am, on the standalone revenue, which has come in at 291 crore. Can you provide approximate mix of domestic OEM, aftermarket, and exports, and what has been the growth in each category on YOY basis?
Just one second, Mr. Raghu, you mentioned something before 291 crores. We didn't catch that sentence. The revenue, is that what it was?
Yes. For the Q2 standalone revenue, which is around 291 crore, can you broadly indicate what would be the breakdown into domestic OEM, aftermarket, and export segments, and what would be the growth on YOY basis?
Just one second. From memory, I would tell you again, as I mentioned, that it would be 33 to 35% for the two-wheeler industry, and it would be 28 to 29% because the Indian CV industry is not doing well, but the global industry is okay. And then, one second, I actually do have a document for this. The replacement market is approximately 15% for this quarter, and the exports is 25. You want it for the specific quarter, right?
Yes, ma'am. Absolutely.
Okay.
For that.
So F226 exports. Okay. So one of the things is that when we look at standalone and when we look at our consolidated, the export is done basically on transfer pricing as calculated by international transfer pricing experts at arm's length. So some of the revenue is actually booked in the international entities. So what I will give you is the entire breakup, and that will give you an idea. But to exactly tell you entity-wise would be complex. Okay? So let me tell you that for the half year, will half year work for you? Because, these numbers don't change every day. So we tend to track them on a half-yearly basis. Is that acceptable? Because I can give you very accurate. Yeah. So if you look at the total pie of NRB consolidated, 31% was 2-3-wheelers. Okay? 15% was industrial. 11 point something, let's say almost 12% was aftermarket. And the passenger vehicle segment was 17%, and the CV was the balance, between 26 to 29%. As you can see, it's very risk mitigated. One of the interesting things is, while we do believe in being in the aftermarket, our profitability is not very different between all these different segments. That is extremely unusual, but a fact.
Got it, ma'am. This is very useful. One clarification.
Yes, please.
I remember it was around 10% for Q2. Has it gone up to 15% in Q2 this time around?
Yes, it is.
That's
correct.
Thank you. And my second question is on return on equity, ROE. Last year, company had 15% ROE. Given that you have a huge target in mind of 2,500 crore, what ROE would you be happy with?
I think that we would be happy if it's 17 to 18%.
Got it, ma'am. Thank you so much. I'll come back in the queue for more questions.
Thank you.
Thank you.
The next question is from the line of Mr. Viraj from Simple. Please go ahead.
Yeah, hi. Thank you for the opportunity. Just two questions. First is on the foray in the industrial business. See, if you look at the marketplace, it's dominated by the MNCs who have a very strong brand recall and large portfolio coverage. When we are now looking at our play in industrial, what are the strengths on which we are kind of, looking to play in terms of right to win? And if you could extend this by talking a bit more on the brand recall of NRB and the synergies we would have on the distribution side for the automotive. That is one.
Can you pose the question? Because I did understand your last sentence, but I didn't exactly get the question.
So, question is, what are the strengths on which we are looking to play and scale up in the industrial business?
So basically, as you know, our entire approach is to focus on high margin, high entry barrier industry. Okay? What we did in OEMs is what we will replicate in the industrial market. So which are these markets exactly? I think that is what your question is trying to gauge, right? We consider off-highway and construction equipment an extremely fast-growing and very quality-driven segment. So we have a huge focus to enter this segment. The other is essentially sunrise industries, because sunrise industries like robotics, automation, drones, we even are serving humanoid and robots themselves. That's a different kind of mobility. Even though it falls in the industrial segment, then medium to large size industrial gearboxes. Now, if you notice, these are strengths we've already demonstrated in the mobility space, and some of the industrial applications are actually in mobility, so they overlap what we've already done. I'll give you an example. I won't name them, but the top 3 aerospace companies in the world are increasingly having to move to India. Some of them are moving by choice. Some of them are moving because, it's linked to the supplies of the aircraft that they're going to make for the Indian industry. And we have been identified by them as a high quality supplier that is supplying Magna, that's supplying ZF, that's supplying Daimler. We supply Graziano, and that goes to Maserati and Lamborghini. So when they see a company that is supplying not just now, but is even designing for the next generation of the most highly powered automotive applications, they identify us as a potential source. And post-settlement, we've moved very quickly to close all the RFQs that we actually received, which means requests for quotes and inquiries that we received for the last 3 years. And that is the reason why we could show so much industrial growth. I'll give you a specific example. For the aerospace industry, we've already designed in spherical bearings in our engineering center. Now it's just a matter of putting it together and getting the actual business in. So you can see this is the reason we are confident, in spite of the double-digit growth that we're promising you will come up within the next, let's say, 2 to 3 quarters. We will move into that phase we confidently see. But we are not saying that our growth will come at the expense of margin, which is typically how automotive suppliers grow. It's because of bringing in these kind of products into our product mix, which will help us maintain our margins. So there are 2 points here to summarize. NRB is one of the rare companies that is predominantly in the automotive component space that has margins that typically companies which are not in automotive have. That shows you that we have a very strong, differentiated, high quality, highly engineered product base. The price that somebody pays for our product is not material cost multiplied by XYZ. It has a whole element of working with a company that can engineer a solution that only global players, MNCs, can typically give. And we're going to follow the same model in industrial. Did that answer your question?
Just one question on this. See, in industrial, if you look at the marketplace, there are many companies who primarily trade, they import and they cater to the local market. Given, the market is quite small and there are many applications. So in that sense, when we are looking at industrial market play, how many of that markets are viable for us, and how are we aligning our cost structure? Because auto requires a more batch processing, continuous processing, whereas industrial is more like a batch processing, right? So just on these two fronts, if you can just give some color, how are we going about it?
So, here's a little bit of a paradox. For large players, the kind of companies that our competitors are, they like to make a part number and make it in millions. That's a methodology. It is a way of manufacturing. It does not mean that that is the way to make money. Our DNA is completely different. I used to get the opposite question in the old days, okay, from analysts. That why don't the global players enter needle roller bearings since it's so profitable? Okay? Well, needle roller bearings, which was the first product we made, by its very nature is a customized solution. You go and pick up a ball bearing from any shop and put it into your application or your vehicle. You want to just go and pick up something standard. But if you want to make a high quality, differentiated product, okay, there are many, or even if you're making a normal product, there are some places where a ball bearing doesn't fit, okay, where there is a space constraint, and you go for a needle bearing. When the load rating that you need is high and the space is less, you go for a needle bearing. That means that every single product that NRB first started making was customized. That means that we have a methodology which specially designs products very competitively. It's not necessarily less profitable for us to make lower volumes. We are a batch production company. That means we don't use one line to just produce the same thing all year. We design our entire line in such a different way that you can very quickly tool it up to take different sizes. Some of the sizes we make them in millions, okay? And some of them, we make them in hundreds. When we make them in hundreds, we get the price difference. We make roughly the same margin for all. You get my point? On the other hand, our DNA is what we call mass customization. From R&D to design to delivery. NRB is able to make high volume and low volume both competitively. So we are actually ideally suited for the kind of market you're talking about. The second point I'd like to iterate, it's a misconception that the industrial market doesn't have high volumes. It's a matter of what you're talking about and what you mean by high volumes. Industrial gearboxes, HVAC systems, of highway equipment doesn't have lower volumes than the vehicles we sell into. For example, NRB supplies to BMW and Mercedes. The volumes of BMW and Mercedes are much lower than the volumes of VW. We supply Audi instead of VW. It's very interesting. All the engineering for VW is done by Audi. Okay? Once they finish designing it, they roll out the same thing in high volume. We may or may not choose to supply the high volume market. If it's more profitable for us, we just design something new. Because the other point I want to make is international companies spend 10% of their revenue on R&D. Our R&D is extremely competitive. We get a much stronger result spending infinitely less. Did that answer your question?
Yeah, sure. Thank you very much.
Thank you. The next question is from the line of Mr. Ritesh from Girik Capital. Please go ahead.
Yeah, thanks for the opportunity. I just have two questions. One, when there is this diversification into robotics, aerospace, defense, and next-gen mobility technologies, is it with the existing products or will there be new products? And if there are new products, what kind of manufacturing capabilities we need to develop?
It's actually both. We are adding new products for automotive and we are adding new products also for industrial. But I can assure you that our core products have a huge industrial market. For example, cylindrical roller bearings. As I explained to you, we are adding a whole 100 crores of investment for roughly 100 crores of sales or 80 crores of sales of industrial bearings, which are cylindrical roller bearings. It's the same product we make. It's just going to be slightly different specifications, and that's what our R&D excels at. Does that answer your question?
Mr. Ritesh, are you on the line?
Yeah, I'm sorry, I was on mute. Yeah, ma'am, that answers my question. Second, on NRB Holdings Limited, which is registered with the Dubai International Finance Center, what's the purpose of registering with the DIFC and what kind of advantage that brings to us?
So there's two reasons. One predominant reason is we had NRB Thailand, NRB USA, NRB Germany, and people in India were struggling to understand the compliance, the, entire method of taxation and all kinds of issues which when you're sitting in India and trying to grasp them. We felt that if you bring, and plus you are adding people in different sales and in, for example, legal and finance and all that to understand this. It is a very expensive cost structure that typically most companies that go abroad use. We felt that if you amalgamate all this and bring it under one holding company and this entire thing becomes one group, one manufacturing entity in Thailand, sales entity in the US which can become a made in USA platform for future, and a sales entity in Germany which can also consider whether the geopolitical reasons are there to manufacture or not over there. And there is an entity in a finance center which is one of the most sophisticated finance centers. To tell you very honestly, we were considering extremely open-mindedly Singapore and DIFC, and we were considering also Netherlands. And all the calculations that we did and the familiarity, the close to India, the comfort that Indians have, it's our largest trading partner, the availability of people. Also, when we hire international people, for example, if we take bearing designer in Germany or Japan, they are very happy to come and live in Dubai. And it allows us to do three things. One of the things that allows us to amalgamate our holding companies, it makes our finances very easy to understand, right? It makes us very transparent, which is one of the key aspects of NRB's hallmark, financial conservatism and transparency. The other advantage that we found is it's very important as you grow because NRB is a multinational, right? So we're Indian multinational located all over the world. One of those, I would say, rare companies in that space. And so it was also important for us to hire people from all different nationalities and attract them and make them part of one group. The NRB group has 220 almost international employees, okay, which is substantial when you think of it. It brings a totally global culture into our headquarters also, something like the Aditya Birla Group has at a very much grander scale, but a similar cultural, I would say, mix, which makes us much more future ready for the next big opportunity or challenge in the world. The other important thing to consider is we felt it's very important to have identical practices, procedures, values, IT systems, HR systems, financial prudence across. So the DIFC company ensures that all parts of NRB, from the parent company to the smaller subsidiary, have a similar culture, similar values, similar policies, and similar principles.
Yeah.
Fundamentally, we believe this leads to accelerated growth. It cuts down the bureaucracy and allows us to grow much faster.
Great, ma'am. That's about my question. Thank you very much.
Thank you. The next question is from the line of Mr. Paresh from Club Millionaire Financial Services Private Limited. Please go ahead, sir.
Mrs. Zaveri, first and foremost, congratulations on building a world-class firm and, building a very strong culture in NRB. Most of my questions have been answered, but pending one, which is with regard to the inventory days, right? Over the last 10 years, the inventory days have gone up by almost 50% to about 350 days. I know in your earlier presentation of June 25, you alluded to how you're planning to bring down the working capital as well as the inventory. So just your thoughts on what could be typical, inventory days going forward on a longer term basis. And on the similar note, in terms of the cash conversion cycle has also gone up. So your thoughts on both of these aspects.
So the 2 points here. One, do we tend to carry higher inventory overall compared to the competition? Yes. The profitability that we have also has at its base the fact that we are 70 to 100% supplier to a significant proportion of our customers. That means that they buy more products from us likely than from the competition in terms of sheer number of products, and that we have a higher market share competitors have at each of those companies. In exchange, they expect us in a very uncertain world to hold more inventory. Okay? So that is the first point. But the second part is, should it be so high? Not at all. There's no question that it shouldn't be so high. How did it become so high? First, the trend started in COVID. After COVID, we actually brought it down. Post-COVID, we had the fire. When we had the fire, a lot of the inventory that was held was actually being checked and rechecked by the insurance company. But at the same time, we had to generate completely new inventory. Otherwise, we could not get the confidence of the two-wheeler industry to actually be able to supply them and come back. So we lost that business and we had to take it back, right? Keep that in mind. Post a fire. To give confidence to our customer, we had to build up a fairly huge inventory. When you consider that in the Indian market, it's almost 35% of our sales that comes from this industry. And this industry required us, because we are the world's number one supplier for the two-wheeler industry. That means the number of products that we supply per vehicle is significant. For all that, we had to hold inventory. What they also told us, they want us to duplicate capacities. And till the capacities are duplicated, which actually worked in our favor, I'll just come to you and explain to you why. Till the capacities are duplicated, they wanted us to hold very high inventories. These inventories are still being reduced step by step. In the meantime, you have this sudden tariff situation. So we are holding some inventory, excess inventories for America. That's also a fact in our whole system, which we're, two things are happening. One, we've recently seen, irrespective of whether tariff has happened or not, some of those companies are just sort of forced to buy from us because we're 100% supplier in spite of the tariffs, and they're even like absorbing the tariffs. But again, we see this coming down because either we are learning to live with the tariffs or the tariffs will go away, and then the inventory will be depleted very, very quickly. Now, the third aspect of this is that when we put in duplicated capacities, which we've done to some extent and which we are putting in right now at one other plant. So what they want is at least one other plant should have the capacity for the same product in case there's a natural disaster. Okay? Correct. Luckily, GST happened. So some of this is helping us, in fact, increase our sales and deplete our capacity. Deplete our inventory.
Okay.
So the short answer to that is, these are the reasons why we have more. Will we have more than our competition? Yes. Will we have as much inventory as we have today? No. It will come down step by step, but it will not come down to the level of our competitors because our margins are linked to this and our share of business and what we call stickiness is linked to this. You know what I mean by stickiness? How sticky the customer is, how hard the customer finds to go to somebody else is all linked to this, which results in prices and margins.
Thank you, ma'am. We'll move on to the next question. The next question is from the line of Mr. Shreyansh from SG Securities. Please go ahead.
Hi, good afternoon, Arshbina ma'am. I had a few questions. The first one was on the present initial remarks that you had on, the expansions that we are looking at. So the 2,500 crore target in FY31. So if I just look at the CAGR, comes to like around 13%. So based on, what you said, do we expect, do you think that is kind of a conservative number or because based on the industrial expansion and the capex and everything that we've got, I feel like it might be, slightly on the lower end, given that the domestic industry itself is growing, 7-8% or so. So.
I'm going to ask you to wait and watch. I tend to be conservative as a personality, and you can see financially we're very conservative. We actually spent all these years that we were doing this settlement also conserving cash, so that as soon as we could enter the industrial market, we can do everything and anything that we want, right? How many companies do you know with 19% debt equity, right? Now we can deploy all that money into expansion, into JVs, into plug-and-play acquisitions, what I explained to you, not big-ticket acquisitions because we don't need to acquire and risk anything, but we are a AA- crystal-rated company through thick and thin, right? So you have to take my numbers with that in mind. Does that answer your question?
Yeah, that's helpful. Second was on the acquisition that you mentioned. So that was aerospace related. What kind of size are we looking at in terms of acquisition, and would that be over and above, the capex plans that you spoke about?
Yeah, it's over and above the capex plan. But what exactly it is, you will have to wait and watch, right? But again, as I said, we're not doing any big ticket acquisitions. We're doing acquisitions to speed up 2,500 or more. You get my point?
Right. So it would be a smaller size.
Fundamentally, it will be products that are let's say as aerospace engines. It will be products that may be similar to the plain spherical bearings that we made, like rod end bearings or something. And it would be probably and possibly what all of Indian industry supplies into, which is HAL, right? All of Indian industry today supplies into HAL. But HAL is already an existing customer of NRB. So it's very easy for us to start with a bigger quantity. But, we really, all these initiatives we're talking about are like 50 to 75 crores. I mean, just to give you a rough number. It's not going to be 100 crores or 200 crores or something like that. If I ever actually found such an opportunity, which I'm not looking for, then we probably sell our headquarters, right, to fund that. So I think funding is not an issue. That's one point. Earning back from this faster and reaching our aspirational goal and securing the aspirational goal or making it higher depending on how any of these things pan out is really the intention.
Got it. That's very helpful. And I had a question on the pledge.
I'm sorry to interrupt. Could you please rejoin the queue?
Okay.
Thank you so much. The next question is from the line of Mr. Namit Arora from Ind Growth Capital Advisors LLP. Please go ahead.
Yes, thank you very much for the opportunity and thank you for setting up this call. It's a great initiative and thank you for very detailed opening comments and responses to questions. They've been very helpful. I just had two quick questions. One was your views on the competitive landscape. There are a fairly large number of companies in India. There are companies globally. But in your view, which are a couple of companies that you sort of respect as peers or potential role models? Just some thoughts on that. And my second question was on organic R&D effort. I understand the focus on acquisitions, etc., but from a longer-term perspective, 3 to 5 years, maybe even longer, are there any capability gaps or new areas or new initiatives that you are looking to pursue by organic R&D efforts? Thank you.
All R&D is organic. I don't think we have to buy any company for technology. I just explained to you that, for example, in aerospace, well, none of the companies that are in India make the kind of product that we make. The product that I mentioned to you are engineered, okay, plain spherical bearing. There are 4 global players in the world. So almost all the products we make and all the competition that we face in the world is against the top 5 players in the world. The world's top 5. So plain spherical bearings, if you do a AI search, you will find 4 or 5 companies in the world know how to make them. And most of the big players who will be mentioned have actually gone and sold their aerospace facilities because, again, mass customization. How many aircraft? Somebody asked me a question, okay, of, how many of these vehicles or these applications in industrial, what are the numbers for each type of focus customer? But aerospace is even less than that. And still the companies that have transitioned from either automotive to aerospace or have added an aerospace division have really grown their profitability and growth, because it could be 100 pieces. I mean, we have an order right now for 100 docking stations. We are putting together 100 docking stations for drones. But I can assure you that the number, that means the value of that, is very interesting. Does that, you know what I'm trying to say?
Yes, that's very helpful.
Ladies and gentlemen, in the interest of time, this was the last question for the day. I would now like to hand over the conference to the management for closing comments. Please go ahead, ma'am.
So, thank you very much. I think I really enjoyed this interaction because it's more of a learning for me than anything else. I understand what are the areas that we should be focusing more on, which are the areas that all of you feel are an opportunity which comes in through your questions. What are the competitive advantages that we have that we should further build on? Basically, how can we grow faster and stay as profitable? There are lots of very interesting insights I got today, and I thank you very much for that. I also look forward to more such interactions. I really enjoy meeting my investors and potential investors because I think that they think about and visit so many different companies in so many different segments, and we don't benchmark ourselves against bearing companies. I'll be very honest. We benchmark ourselves against companies that are innovative, disruptive, and leaders, and we try to look for niche products that have a huge enough market to make a significant difference to our turnover. And I got a lot of insight. Thank you very, very much. It was wonderful to interact with all of you. With that, I hand this over to Divakar.
Thanks, all of you. In case there are some of you who were possibly on the line and didn't get an opportunity to ask a question, you can drop your queries to us, either to me or Siddesh, or the email ID put out in the presentation, and we'll be happy to get back to you with our queries on that. Thank you very much and have a good evening, guys. Thanks.
Thank you, sir. On behalf of NRB Bearing, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.